Okay, so welcome everyone to tonight's class. It has been a very beautiful moment on uh, on the charts, right? So let's just go straight to the point. This is a weekly outlook, so I want not us to waste too much of our time, as I know that we are busy. Um, let's just go straight to the point. So as usual, we start with our DXY. Of the our DXY. See what we have on our DXY. So last week, I said something. Was it last week? Oh no, some 2 weeks ago, right? I said something about, yes, how that we're expecting that when we swept this liquidity here, this relative equal low, right? This relative equal low, and we had this other block here. So at this point, yeah, you can check it. You can check the weekly outlook for the third or the last week in April. At this point, I said we should anticipate a little move to the upside, either to this zone here, or I went down to my 1 day, my daily time frame, or this other block, right? I spoke about this other block here. Although I was actually anticipating that price will get to 50% this weekly range, right? This range here, price came up this liquidity, took up this, and this is a clean breaking structure to the downside. That is, this was where we had a breaking structure form. So from the beginning of this high, the high that broke the structure down to this is another low. Yeah, this is a low that what broke this structure, that is took out this high. That is our range. So I was actually anticipating that price will get to mid of this range, that is equilibrium for downward. However, I told us that once we get to this region, we can begin to, we can be careful, right? You can begin to take caution. So last week we were not able to have our weekly outlook last week. Yeah, yes, we were not able to have our weekly back test last week because of some. Because I just wanted the market to just play out. So price got to this other block and what it expected downwards. Even though I was still anticipating more upper price, more upper price action, but told us that it's always good when we was take partials certain zone. Let us see how this look like our Euro USD. Can you see what happened here? Can you see? Remember I said this like some 2 weeks ago. This is how it looked like on our weekly time frame, right? That's how it looked like on our weekly time frame. Price took out this suppose, took out this high. But I said ultimately I'm expecting some of these zones to be taken out, isn't it? Yes, that was what I said. I expect some of these zones to be taken out, especially on our monthly time frame. I showed us something on our monthly time frame that time. So I was anticipating that price should. So I was anticipating that price should still go higher, right? Because of a monthly narrative. And I said something that that whenever an external liquidity is taken, switch to caution mode. That is, when an old high or low is taken out, you can anticipate a move in opposite direction. However, always watch out for confirmation, or better still, look into another pair. So we had something play out here. Okay, for those that just joined, I was explaining how that on our DXY, we anticipated that about 3-4 weeks ago, since April, immediately this relative equal low was taken out, and we were in this doji candle on our weekly time frame. I said whenever a major low or high that the external liquidity is taken out, you can expect a brief which is going to the upside. So I marked my range here. Now, why was this my range? So because if you go down to your daily time frame, you will see that there was a breaking structure here. We had a breaking structure around this zone, right? Price took out this high, and what this high was responsible of taking out this low here, right? Let me confirm my screen still here. this low was taken out, so we had the breaking structure to the downside. Then at the same time, we had another what breaking structure here, the upside. This low was taken out. Then another what low, another high was taken out. That is, liquidity was taken out on both the high and the low, or yeah, you can say both the low and the high. So once you have liquidity taken out on both sides, that is what a breaking market structure. However, I said even though I was expecting price to get to range, that is equilibrium of this range, that is 0.5 level of that weekly range, I said that once we get to this candle here, you might want to take caution. Remember, I said that in as much as we are still bullish, no, not bullish, that in as much as we are having a retracement on DXY, that I always love to take caution when I see doji candles like this that is attached to fair value gap. And price played out. We didn't have our weekly lookout last week because of some reasons. So let's check Euro USD for more clarity. So the same thing I marked here, I had marked this guy since this same doji candle. Can you see how Euro USD and DXY correlates like almost 95% correlation? DXY and GBP USD correlate to, but not by 90%, it's by 80 to 75%. Now, one thing you must understand about forex trading, I've said it in our first class, is that forex trading is not fluke. Why? Because it is as real as your market. It is as real as your local market. Once your local market is shut down, there is no liquidity. Once that your local market, maybe Ojaoba or whatever market you have in your zone, once it is open and there is a chart representation whereby you can look at what is happening, you can read the activity of the market, you will see that there will be a lot of activity, there will be a lot of fluctuation in price, rising in price. Why? Because there is liquidity. And I've said this over and over again, liquidity is simply money. Liquidity is money, and what brings in money into a market or into an asset, it is simple. It is the activity of men. That's why both the poor and the rich, they always exist. So you choose your reality. So now, why is Euro USD more oppositely, correlated with DXY than the way other pairs are opposites correlated with DXY? It is simple. Each of these pairs, there are certain things that makes their bond strong. Okay, quick one. In chemistry, we learned of hydrocarbon, oxygen bond, and all of those things. So there are certain things that make some pairs that makes their correlation strong. Now, take for instance, have you tried trading Euro GPP? Oh boy, you will sweat. Why? Because those pairs, they are two strong major pairs, and most of their economic factor are closely related. Their interest rates, their inflation, everything, they are closely related. So it is hard for one to override the other. That's why the spread is always much. You get, and that's why you see that pairs like that, they are very slow. But once you see pair like Euro USD, you can check it. Just thing I'm saying, go and check it. Check it. Look at pairs like USD JPY. Look at all those pairs that they easily move one-sided for long. You see that it's either one currency is way weaker than the other one, or one currency, you see that there's a factor that makes them bond. Like Euro and USD now, their interest rates and their inflation rates is different. Okay, I will make a post on my social media handle, and for those that have my number, you see it on my status. How that this pair, how that they correlate, why they can jam together, why if why you can trade Great Britain and JPY together, because their strength differs, so it makes the bond stronger. You get, it makes it easier. But when you are trading a pair that the interest rate is almost the same, the inflation price is almost the same, there will be struggle. Now, Euro USD, you can check this online, converting Euro to USD. You notice that for GPP to USD, they are almost the same. Like the distance is not that much, but the percentage at which Euro is higher than USD is much compared to the percentage by which Great Britain, that is pounds, is higher than USD. That is why. Euro USD is as though it is opposite correlated with what? With US dollars. So can you see how that we had almost the same thing? It's as though you're just turning this chart upside down. See it now. Almost the same thing, almost same pattern, right? Same pattern. Doji can do fair value gap, the previous week in market structure, everything fell back down. Same thing here. The Doji can do fair value gap, the previous week in structure. Now price is going back up. And I told us that I've drew this since a very long time. The same thing I drew here. What are we looking for this? We would have engaged this by going to our 4-hour time frame, right? I love to engage price action on my 4-hour time. So immediately price got into our zone. This was Monday. So sorry I didn't have market outlook last week. Would have looked into these details. So immediately we have a clean breaking structure on our 4-hour time frame. We can anticipate a clean move. In fact, at this point we have a trade. Even though they did get there, we will check this up on our 1-hour time frame. I did a course on my YouTube page. I will post my link to you guys. How that you can I'm not sure it's on YouTube. I think it's in my mentorship class. Yeah, my paid mentorship. I will see if I can pull out that YouTube. There's something called time frame correlation. If you are in a zone on your weekly time frame, your confirmation should be on your 4 hours. If you are in a zone on your monthly time frame for swing traders or investors, your time frame confirmation should be, that is your entry model. If you are using monthly time frame for I should type this out. If you are using monthly time frame for your reference points, your entry pattern should be daily time frame. Guys, don't forget this. I'm giving you guys this for free. Let me say this in my native language. So yeah, for those that don't understand, the good Lord grants you understanding. So if it is weekly time frame, you make use of what? Your 4-hour. If you are using your daily as your bias, that is, you are taking your bias from your daily time frame, your entry pattern, don't use 4 hours. It might take time for it to form. Use 1 hour. Then if you are taking your bias from a 4-hour time frame, oh my god, what I'm giving you guys is too much information. Too much information. Make use of M30 or M15. Guys, this works like magic. I used this method on a $50 account. When I saw how successful it was, I immediately switched to a $15,000 account, and it worked perfectly. I used that for over 6 months. So for those that used to complain that I don't have capital, that's why I'm not with you. What have you done with your little? That's by the way. So if you go down to your 1 hour, you will see this daily. But anyway, on our H4, we see that there was a breaking structure here, right? And price invalidated this other block. Then price did what? Alibabs, you will understand this very well. Remember, this is my favorite. This candle. That's all. That's all. So if I was using H4 as my reference point, what would I use for my entry? M30 or M15. Gives us daily. So since, let's check this. This class will be ending very soon. So sorry about that. I had some power issues. So since this guy was rejecting from this other block here on a daily time frame, right? So a good entry on our 1 hour. As I said, I'm not here to teach you guys your entry model. If you want to learn that, up into my, I'm just here to just give us what I'm anticipating price to do for the week. Can we see how this work out, guys? So immediately you see that price has got into your daily time frame zone. Just go straight to your 1 hour. You would have seen a good entry at this point. Even though price did come back into this fair value gap, you could have used your breaker block here. Can you see? That's why you must have at least three confluence for your entry patterns. So this place here, this is your BMS on your what? On your 1 hour. Right? So that if you're waiting for it to form on your daily time, on your H4, you would have been waiting here, right? A swing trader will be waiting here. But for an intraday trader, using that daily that time frame combination, you would have seen your BMS here. A sweep here, right? A sweep within that zone. Your BMS here. Wherever your entry, you can use this breaker block, or you can wait for this fair value gap. This is not your breaker because this was not the eye that made this BMS formed. No, so this is not your breaker. This is your breaker. This was the eye that took out this low, then this low took out this eye. This is your breaker. So you could have used this. I have a friend, His name is Osang. That guy. He does no other thing but breaker blocks. Breaker blocks. That was that. In fact, once he sees the breaker block and the fair value gap, he he rejoices. So this is it, guys. Can you see how that you would have engaged this price? And if you think you are not so sure about this zone, then you can use this place to have told us the goal is being profitable. You don't need to find like someone like me that I always like to catch 1/5. There are times that boy I need to bend my rule. Get it's just the goal is being profitable. I'm a fund manager. I'm not a forex trader. Yeah, forex trading is my stream, but I'm a fund manager, and the goal is profitability with capital preservation. So as long as I'm profitable, 1/3, 1/2, oh boy, I'm done. So this is not up to 1/5, but guys, this is good, isn't it? It's good. This is 1/3.6. So imagine you're trading a $1 million account and you're risking 0.5 on this kind of trade or 1% on this kind of trade. So you're getting what 3.6% on your account on a $1 million account. If you have this on just one pair and you have 5 pairs or 3 pairs that you're looking at, and you're getting just one good trade, like one good trade on 3 different pairs, 1/3, 1/3, 1/3, 3% on 3 good pairs in a week, guys. I say you are good. See, you only need to get one good trade on one pair, then another one, then another one, then you're fine. 3 wins in a week can make you, yeah, can make you very, very profitable. And I've learned that from some of these big boys, the likes of Dapo Willis, Joe Miller, and some of my other um mentors. Okay, so I've spent too much time talking. Um, don't worry, the recording will be made available at most tomorrow. So my weekly time frame, what am I still anticipating? Guys, don't forget this. Oh, this is juice here. This is juice. Yeah, change the trading career to pay tight. Give me. Yeah, I just spoke as a Niger boy that I am. To pay me tight. Okay, so price is presently rejecting at a fair value gap on your weekly time frame. So that is this fair value gap here. So we should expect price to what take out this eye. So I guess that's other block there had done its work, but I won't delete this other block too fast. Once I get to this zone, I might want to be a little bit cautious, but I still want to I still strongly believe that price should what take out this eye. Let's see if there's another block on our daily time frame. That's the only thing that can make us cautious. Guys, I'm going bullish on this. So this eye is my next reference point. Remember, I do this that for me to see a 4-hour breaking structure on my weekly time frame reference point, I'm obeying it. And what do we have here? This is our weekly time frame, right? Weekly time frame fair value gap, right? Same thing here too. Weekly time frame fair value gap, right? Sorry, right? Weekly time frame fair value gap, same thing here too. Weekly time frame and monthly time frame fair value gap. Then what happened? Down to your H4. Weekly time frame H4, daily time frame H1, monthly time frame daily, daily time frame. It's just simple. It's simple. Don't kill yourself. Always cannot come and kill. Yeah, you have wife and children. So what do you see here? Same thing. Immediately you see your clean break instruction in your 4-hour time frame within your weekly reference point. So boy, start looking for buys. It's as simple as that. See, break instruction. This I was taken out. Start looking for buys. I already do my pattern. Once I see it, which I saw it, and I give you guys. I think I gave this call. This is your other block. So weekly time frame H4 for break instruction. Right. So I don't know the kind of entry pattern you use to take your trade. Whatever entry pattern you use, beautiful. This week, let's anticipate more buys. More buys. I might be a little bit cautious at this zone on my 4-hour time frame. Yeah, but depending on how the volume of the move is, you can hold. Because this is what we have in our weekly time frame. Anticipate that price will still take out this eye and move forward. So on our GU, on our EU, I said we are bullish. GU no get time. Oh, GU. Can you see? Can you see what I said about the correlation? GU it's already forming new eyes. Oh, GU, my love. GU, my love. I'm very cute. So you got into the fair value gap. This is my pattern. Oh. I always have it here. I said, as an intraday trader, our goal is to know what market is doing on our H4, sorry, on our higher time frame, that is your weekly and your daily time frame, and interpret it to your hourly time frame. Let me make this big so that you won't have to strain your eyes. Yeah. Oh, so now that GBP has taken out the high, came into this fair value gap, took out this high, what can we anticipate for? Ultimately, we have an relative equal high to be. We don't know how quick and how fast market want to do that, but as it stands, I'm not sure this zone will hold. Why? Because of this momentum. This momentum. Note what I said. This candlestick momentum is high. It is huge. So this is not an order block. This is ordinary block. Another block. So I should anticipate that all this trend line liquidity are taken out on our GBP USD. That's what we have on our daily time. Daily time frame too. We are still quite bullish, even though there are so many imbalances here to be. But if markets is one-sided, can move as crazy, very aggressive. So you can use whatever entry pattern that you use to get your entry. So you can just wait for price to do some little drop, take out some little, maybe this liquidity here or this liquidity here. I wait for price either at any of these blocks. And note that my price might not also get there because this guy is hungry for people. So it's be hungry. Last 3 weeks we had a US China tussle that made DXY gain some strength. That was after it took out those relative equal low. So after that fundamental news, I think it's affected the market for like 2 weeks, 3 weeks max. Then that was when we saw DXY drop again and XXUSD pump to the upside. So we have a big instruction at H4, so you can make use of what's other blockade because there's liquidity low. So that is it on GBP USD. The pattern is the same. This is a crypto pair, breaking structural prod. You can look for your entry pattern around this one. BTC, my guy, BTC line has formed a new high. Which other pair would you love us to look at? Anybody? Type it in the chat session. Which other pair do you want us to look at? Okay, one of these days we will look into commodities. So USD JPY, and I love this pair. I love this pair a lot. That's because of the way the pair is correlated. Remember, I told us in our last weekly outlook that price had been bullish for a very long time on USD JPY. Price has been bullish, right? But we had a wonder, yeah, when price came to take out this low, rejected a little bit into this fair value gap, came down to take out what's this, then it went up to fail to cause a higher high, just normal microstructure. So we had the failure swing here, right? That is this high failed to take out this high. So I said since we had the failure swing, I'm anticipating that price will take out this low, which it didn't. So I told us we should check it. That this for me might be a dicey move. It might be a dribble. Let me call it a leg over. Yes, Ronaldo's leg over dribble because price failed to take this low before it moves upward. Even though it took out a low here, but I said I'm still anticipating that price will come down. I wasn't 100% sure because Father is not the owner of the market, but told us that once we get to this place, let's just rest and take profits. Can you see now? Just this place. Can we see how we can really manage our trades? Start putting ourselves. We really can manage that. So that USD JPY really did well. It really did well. How this eye really did well. It did well, like the way we anticipated it. So for me, I don't think this is rejecting anytime soon. We can still have price come and take out of the price. Yeah. So you can still anticipate some further bearish move. It not happen this week. It will be confirmed next week. I'm not sure if this one will hold because of that liquidity availability. So for me on USD JPY, I'm still bearish.